Jumping right into some bizarre little numbers that I've been crunching, trying to make sense of things. I wanted to do some back testing on diminishing returns, percentages down, and where that would put us from where we are now to get a situation of maybe where, if we can see where things might go from here, we may understand a little better where we are right now within this cycle. So if we go to 2017 top to its bear market, it's roughly 85%. And if you notice, this line here it goes back to the 2013 top, right? So if what the correlation here is the Bitcoin bull market top and its bottom bear market. So now we move into, keep in mind that this is the 2017 top, right? When we move into 2021, and we see from the top of the bull run right here to the bottom of the bear market is about 75% drawdown. So we lost 10%, diminished returns to the downside of 10%. But more importantly, keep in mind that we basically, remember, I'm sure you remember this, that when we are heading towards, I guess this was 20K. Remember 20,000 was like, we'll never break 20,000 because that's the top of 2017's bull run. There's this correlation between top of the bull market and the bear being at the same level, right? So let's just say that is part of the cycle theory, right? Even though we did break it. We did go under it, but I mean, when we look back now, we barely even remember that we broke it. We just know we did break it. But anyway, that was 75% drawdown. So now, if the cycle theory isn't broken, we would assume that from our peak, we would come down and let's give a diminishing return as well. Instead of 85, 75, let's give it a little more. And we want to knee jerk go 65, right? But let's just go 85, 75, I guess 65. Let's just follow the trend, 10%, even though 10% gets diminished amongst 10%. Anyway, you know what I'm saying here. So it would make sense that from our bull run top of 2025, a 65% drawdown should take us to or in and around this last 2021 bull market top. I hope you're following. I remember when I was going through this head, it's like, this is too many numbers coming at people. But anyway, it's not in a nutshell, bull market top, bear market correlation, right? So that's all I'm really trying to get. So let's just say that this bull market, let's say she topped out. Okay, we'll go there. We're just doing some thought exercises on numbers. And then we had a 65% drawdown, not a 75, just the 65. We're going to give ourselves the benefit of the doubt, so to speak. 65% giving us the benefit of the doubt takes us to 38K-ish, right? Now, you remember how many people said, we'll never hit, 69, I think is the number that I've heard a lot from some of the bigger YouTubers, 60, and we'll never see 69. And, of course, once you hear never, it's almost imminent. But that's 65%. Now, not only is that a bizarre number for the bear market, just in general, but it would also break the cycle theory of finding support at the previous bull market's top, which is 69K, right? That's where they get that number from. They're not just, genius crystal ballists. They are just going by the cycle theory. The last one was 69, so we should find support at 69K. Now, that's why this 65% drawdown would be so bizarre, because it would take us to 36K. Now, this is where I think my lack of no num-nums comes into play, because I know you can't compare certain percentages with certain percentages, but I'm just going to do it anyway as a thought experiment here. So if we were to do that 38K That would be a 42% continuation off the cycle theory. That's pretty whacked. And I mean, maybe my number, maybe that's part of the, you can't correlate certain percentages with certain percentages. But I just wanted to do this as a thought experiment. That would have been, let's say we saw that same correlation last bull run. We would have 40% down from the 20K would have been put us at $10,000. Now there was talk of 10. There was talk of 10,000, but this is where I want to reverse engineer in a perfect cycle theory. In a perfect cycle theory, we would have a drawdown of 65%, right? From our all-time high that would take us to in and around 2021's bull market peak, which is 69K. So what is the number that we would have to hit in order for this to play out in an absolute normal way? Let's see, we got to make this smaller here. We go way up here. I already planned it out. So I know where the numbers are. It's basically 217 takes us to 68% drawdown. 217 would be the normal cycle top based on a reverse engineered 65% drawdown. Now we're not guaranteed 65% drawdown. Maybe it goes back to 80. Maybe it goes to 75. Maybe it goes to 40. You never know with these diminishing returns. One might say if 109 was the top, not saying it is, just if 109 was the top, then we would maybe consider an even more diminished downside. Not increased downside. Imagine how ripped off people would feel if not only did we get a diminished upside, we got a increased downside. It would be the type of mathematical melee that would just drive everybody out. Can you imagine? I mean, of course, the diehard hodlers would look at it as gifts. Buy the dip, it's a gift. Dips are gifts, right? To a certain degree. But when you see diminished returns on the upside, but increased losses on the downside, that's not going to bode well for the future of people coming into this market, unless it's a nice restart. So there's some examples when the market gets. So let's follow this little random thought here when it comes to this market's, I want to call misallocation of capital. When we see the majority of the new investors, I'm not even calling them, let's call a spade, gamblers, coming in and taking that the capital allocation that would have been for Bitcoin, and they put it into pianomattyb coin or MIF or WIF or whatever, these meme coins. It is, in a sophisticated market, a misallocation of capital, right? So they're basically going from investors to gamblers, which is fine. And we kind of knew that would happen based on the health of the economy, right? So you have some people that aren't allocating. Well, they are, I guess. In my head, I was like, all they have is $1,000. So it's like a Hail Mary investment / gambling into a meme coin, and then they get wrecked and they're never coming back, right? So we're seeing this misallocation of capital that's reducing Bitcoin's upside, in my opinion, and that could be one of the reasons why we don't see any pumping, right? What's going on with we have nothing but bullish everything. Like the market couldn't be more bullish. Like, not the sentiment. Don't get me wrong, the sentiment has never been so bearish in my whole Bitcoin journey, right? Even in the depths of bear markets, I don't remember sentiment being as bad as it is now, which is a new exercise. This is a new. The funny thing about bull run and the Bitcoin journey is that it's always so humbling because it takes you on. It's like ayahuasca, Every time you do it, you kind of go somewhere else. The conceptual aspect of reality starts to bend in different ways you didn't even know it could go that way, right? So I didn't really think the last thing and this is probably why it's played out this way, but the last thing on my crypto Bitcoin bingo card was that we would hit 100K and sentiment would be in the toilet. I would, that would just, if you tried to tell me that, like, I don't know, 2023, 2024, I wouldn't have believed you. Just because it doesn't make logical sense. You know what I mean? Why would people be bearish at 100K? At 100K, that's an insane number for Bitcoin. And then people would be like, is it insane though, or is it hella low? I would say it's hella low based on most of me watching the Bitcoin price and seeing all the bullish fundamentals coming in here. I would say that it is, but maybe that is building the expectation disappointments, right? So another reason why, if we had diminishing returns on the upside and hella returns on the downside, I think it would be the nail on most part-timers' coffins, if you know what I mean. Like, if you are on the edge, maybe this isn't for me, or maybe they're right. The volatility is too much, right? You know, there's a lot of those people. I would say the stomach of the retail investor is probably stuck in that red light, green light, I'm not sure type of atmosphere. Whereas, you know, old school, soulless, dead-handed, diamond, laser-eyed, what have yous, we would accept it as a gift. Like, imagine 38K. I don't think, and this is the first mistake. Whenever you say, I don't think that this could happen, so I'm doing it in real time, I do not think that we would go to 38K. But an interesting thing, feels like the bottom, Sneaky Pete. The interesting thing is that if cycle theory did play out, you know, the way it's supposed to play out, top of the bull run goes to the previous bull run's top, remember? So 2021's top is 69K. So to put that into perspective, how far away are we from what would be considered the bear market bottom, right? If that's the cycle. If the cycle is top of the bull run gets drawn down to the previous top's bull market top. I'm saying the same things again, but you know what I mean. If that's the cycle theory and that's how it plays out, then we are currently at where we are from here. Are we not 84.1? No, we're at 80.7, clutching the pearls of the 80s. We're only 15% away from the cycle theory's bottom. To me, that's fascinating. Like, to be where we are now, where we've come from, and only 15% off from the cycle theory bottom. It's pretty nuts, because let's see where 15% is. Like, where would we be talking 15% back in 2022? So if we go from 20K, which was the cycle theory bottom, 15% would have put us at, come on, 22K. So we are somewhat at the equivalent of 22,000 in 2022. Now, maybe these numbers are a little skewed when it comes to percentages from and against, right? But I'm just trying to put things into perspective where we actually are compared to the cycle theory. 2022, we would be in, like, denial stage of the bull market, when really we are just 15% away from the cycle bottom, which is crazy. That would mean 22K. And now we are 15% away from what the cycle bottom would be, which is hella bizarre. You know, the law of large numbers, this is why it's like humans, they don't understand time and exponential growth, right? This is why to me, all these num-nums are so fast. I don't mean no num-nums, but to me, being 15% away from what would be considered the cycle bottom is pretty bizarre. Fear and index 24. I would expect it to be lower. You know, it went up. Like if people aren't as in fear, I would say that until even as price goes up, I would expect as price creeps up, let's say goes into the high 80s, I would still expect it to extreme fear to be down for some reason, because it's like the sentiment of the market is unless we're at all-time highs, we're at extreme fear. Like don't even wake me up until we're at or above 109 if and when. Bitcoin dominant 61.2%, 24-hour volume 154 billion, and the overall market cap 2.64 trillion. Give or take 100 million. So we have lost 3 trillion, which is another metric that you know there's some key metrics that a lot of people don't really want to face, right? Losing 3, like I would say that most people were arguing 5 trillion would be the market cap. And listen, we still got a huge year still. We're in the first quarter, coming off an election. There's a little bit of an election honeymoon phase where nothing really happens. It's everyone's getting their ducks by the pond. But because we have a misunderstanding of time, we as humans and investors want it now. We want it yesterday, right? So patience is always the key, I suppose. When we go and we take a look at this 4-hour noisy little so-and-so, you know, nothing's really happening. The only thing I would point out is a lower high. You know, that's bearish. I mean, in order for me to remotely get on the bullish chapeau, we would have to, I would say, get back to the golden pocket, 61.8. What is that, 89? All right. See, this is the important part about 89. Remember? Yesterday we were talking about this. 89 is in and around how most bull markets finally capitulate. And if you didn't watch yesterday's stream, I'll repeat it. If you did, it's probably confusing anyway, so I'll repeat it anyway. What happens in all bull markets is that from our peak, we have a correction, right? And then from that correction, we usually, and when I backtest this, we've done it since 2013 is kind of wonky, right? It's almost like, you know, high school girlfriend, boyfriend. It's like, I don't know what I was doing really. It was exciting though. So what's happening here is that we have a correction from our all-time high, and then when we get back to the 38.2% fib, that is where, if we don't get past it, that capitulation after that is usually brings on the lower low, and then we're kind of sail away from that all-time high. So that 89 to 91, depending on this candle close, right? Like, so we're getting the support here at 80. We haven't closed past it. We've thrown some long hair, don't care wicks down there, and that's fine. But 89 to 91 is if and when we get back up there, which I assume we will have some relief. Like markets just don't plummet with blood on the streets forever. There is relief. Sellers get exhausted too. It's just the way money works and numbers. There's just not enough on one side all the time. So there is relief. So when the next relief rally comes in, we need to keep our papers on 89 to 91. It's basically the most important level to get over in this bull run. You know, once we're over there, we can recalibrate. You know, we know that this isn't this. We've broken that traditional capitulation area where we all-time high, hit a bottom, come back up, and then that capitulation is where the 89 to 91. That's the key. That's the key. You know, you'll probably hear that come up now more times than not. David Sonny Music, thank you for the super chat. He says, appreciaciones on a Tuesday, Momo. Thank you very much for the super chat, David Sony Music. Much appreciated. And this is another thing. Randy Hipper, good morning. Smash the like. She says, what are we doing here for Duke? 51. Day off for Duke. Let's go to this monthly chart. One thing that I don't... Oh, was it the monthly? Yeah, where am I going here? Where did my indicators go? Where did the MACD go? I thought I was looking at this. Was it something else? That's not the MACD. Well, let's just bring it back up, I guess. This is annoying to have to do this. This is why I hate the trading view. And it'll come up all wonky too. Like I have to... MACD, come on. Moving average, convergence, divergence. There you are. Yeah, see, it's weird because I was just looking at this, as the stream was about to go. It's like making sure everything's fine. Of course it was, and then I go back to it, it's gone. Anyway, what confuses me is that I'm so what is it like? See, this color is blue. I can't believe I'm doing this on the stream. Come on, see. When I hear music, I hear it in colors, right? And so when I see this MACD, this thing's gotta be green. I don't know why it put it up there too. If it's not green, I just don't understand it, right? So this is the monthly chart, and of course, once this crosses bearish, right here. Wait a second. It popped back up. Oh, my God. There it is. Was it there the whole goddamn time? Anyway, when the monthly charge MACD crosses bearish, there's no coming back. We've never done that before. If we take a look at 2021, even with this double top, we see that we kind of started heading towards it. And then right at the nick of time here, we started and we had our second little bump there. But once we went under her, that was it. That was it. Is it freezing for you guys? I don't know. I had a hell of a time getting on Rumble today. Rumble's so, Randy, if you're still there, getting on Rumble is so clunky. It's like, I want to support it, I love the aspect of free speech and no censorship, but it is so clunky. Then you go back to 2017. And again, let's make this, how can we make this bigger without screwing everything up? You can see here, and once we went under her, that was it, right? So we got to watch these historic metrics. And so for the MACD, I don't use many. Why is the dictionary come up? This is my left hand. I haven't even touched anything. Come on. I actually feel when you live stream, your computer all of a sudden gets put into like a weird stress mode, where normal processes become bizarre, and it starts panicking. Kind of like when you play a tournament, for instance. When I play squash tournaments, I get nervous, it's just so silly. And I don't play as well. It's like the computer when you live stream. So anyway, long story short here about this MACD. We got to watch this. This is a metric that she's getting close. There's no doubt about it. There's no doubt about it that it's getting close to crossing bearish. And once it's crossing bearish, we can say whatever we want. But the one thing that would be true about it crossing bearish is that it never comes back after that, right? This is the monthly chart. She's like one of those boats in the sea. It takes forever for them to course correct. So once it is, it's really a good signal of where things have been, monthly chart speaking. So that's the biggest thing. There's two things I'm keeping my peepers on. If you want to do this for your own personal safety, to make you feel better or worse, it depends. A lot of people come. I've been noticing, when I watch certain videos, any creator that isn't kind of blowing bullish smoke up people's arses. The comment section is really bad on them. They're like, you're so bearish, you blah, blah, blah. It's like people are just trying to give you the best truth, right? And I know YouTube's better with always be bullish. Unbelievable. We're going to the moon. People like that. I get it. I like to hear it too. But I like to hear the math, like what does someone think about the numbers, right? So this is the only thing I'm looking at in this bull run right now is this monthly MACD crossing bearish. Because at that point, I'll just, that's fine. At least it's a good metric to really base your judgment on, moving forward. And then the other one would be the 38.22% rebound, right? This is arguably maybe more important, which is around this noisy little so-and-so, these charts, they're getting grotesque. If anything, people would say, yeah, that pianomattyb charts, they're pretty messy. 38.2% fib is at 89. Let's just call it 90K, 89 to 91. This is the most important level to get up and over. I can't stress that enough, because a rejection from here, from an all-time high and a bounce, usually dictates that we will never see that all-time high again till the next cycle. This is just what history says. Not saying it's going to, but if it doesn't do that, it'd be the first. So you kind of like, it's almost like a buddy, like that always does the same thing, and you give him the benefit of the doubt. Well, he's always done this, and if he was ever not to do it, it would be the first time. And let's hazard to guess that it'll be the first time. Yeah, you can do that. But if you're going to play the probabilities are once we hit an all-time high and candle close and have a nice little refreshing bounce as the sellers are exhausted and the bulls come back in, but really the sellers are just getting patted down by their boxing coach. Yeah, you're going to do great. And then they come back in at that, usually at the 38.2% fib. Now, that's why it's only, $7,000 away. So it's about an 8 or 9% pump from here, but it's almost perfect. If you can see like that 8,000 would be, have a good stream, Randy. Catch you later. That $8,000 pump is like, that's a big day. That's almost a God candle, 10,000, right? So we're at about, I guess 7.5 to 8.5%. I mean, no nums, right? But that's what that candle would be. It'd be a perfect time to hit that 38.2% fib and take a little hairbrain. Let's see what of course, you're going to do this to me now. Now, the big kicker is, come on. The big kicker is, what does the Grok AI say? Let's have a listen. Based on historic Bitcoin cycles and drawdowns, where would you expect this bull run to draw down if we topped out at 109?
Hey there. Early morning crypto talk, huh?
Yeah.
All right. Some patterns to chew on. Bitcoin's had a few big bull runs, right? Like 2013, 2017, and 2021. Typically, after hitting a peak, it draws down pretty hard. Anywhere from 70% to 85% off the top. So, if this run peaked at 109, assuming that's 109K in dollars, the drawdown could land us somewhere between, say, 25K and 35K at the low end. That's rough math based on past cycles, like how it dropped from 20K in 2017 to about 3K. Of course, every cycle's a bit different. Diminishing returns, more adoption, so it might not crater that hard this time. Could stabilize higher, maybe 40K or so. What do you think? Does that vibe with what you're seeing?
Well, I was just talking about the diminishing returns aspect. So 2017 saw an 85%, 2021 saw a 75%. So what would logically you expect for this drawdown?
Yeah, you're spot on with that diminishing returns angle. It's like Bitcoin's growing up a bit, not quite the Wild West it used to be. So, 2017 had that 85% drop, 2021 shaved it down to 75%. If we keep that trend going, this cycle might see something like a 65% to 70% drawdown. Starting from 109K, that'd put the bottom around 33K to 38K. Feels reasonable, right? Less panic selling these days. More big players holding the line. Could still dip lower if the market gets spooked, but I'd lean toward that 35K-ish range. What's your take? Think it'll hold strong?
If you're familiar with the cycle theory, what would it take for this cycle to officially break the cycle theory?
All right, diving into cycle theory. Pretty cool stuff. So, the basic idea is Bitcoin follows these 4-year halving-driven cycles: bull run, peak, bear market, recovery. For this cycle to break that pattern, we need something big to throw it off the rails. Like, if we topped at 109K, but didn't see that 65% to 70% drawdown, say it only dropped 30% to 40%, landing around 65K to 75K, and stabilized there, that'd mess with the theory. Or, if the next halving didn't kick off a new bull run, like if adoption stalled or macro stuff like crazy inflation or regulation crushed the momentum, another breaker could be time. If this bear phase drags way past the usual 12 to 18 months, or the next peak hits way off schedule. Basically, it'd take a serious curveball to snap that halving heartbeat. What do you think could derail it?
Well, I have, based on market theory, if everything works out the same way it has worked out, I have our top at $217,000. What do you think about that bull market top for 25?
Whoa, 217K for a 2025 top? That's a bold call. I like where your head's at with market theory, though. If we're sticking to the cycle playbook, that'd mean this bull run's got some serious legs, maybe fueled by bigger institutional cash or a wild FOMO spike. Historically, each peak's been about 3 to 5 times the last one. 20K in 2017, 69K in 2021. So 217K would be a solid 3x from 109K if that's our current high. Could happen if the halving hype, ETF inflows, and maybe some global economic chaos align just right. The diminishing returns trend might cap it a bit lower, but 217K, that'd be a hell of a ride. What's driving your confidence in that number?
Last question. If power tools weren't invented till 1895, how does America, cities like Boston and even California, have these massive monolithic churches and perfectly sculpted marble pillars without any power tools? Make sure you like and subscribe and share this video.